Hello everyone. This is Ankit Kanodia from Smart Sync Services, and I have with me Shivam Shah. Welcome to the 43rd Mission Smile webinar. Yes, you heard that right. This is the 43rd Mission Smile webinar. So you can calculate how many months or years we have been doing this regularly. And today is a special session because uh, today we have our stock advisory customers also, members also being a part of this webinar. And Mission Smile members will also get a flavor as to what we do at our stock advisory services, where we focus mainly in micro cap stocks, as in stocks which have market cap less than 3,000 crore. Okay. So I'll just start with sharing my screen. Just someone can just let me know, or Shivam, you can let me know if you can see my screen now.
Yeah,
I hope the annotations are off. Just checking. Yeah, great. So I don't know how many of you have heard about the name of the business because before everybody joined, there were a few members who joined, and I asked, and I think most of us have not heard much about the business. So with this webinar, we intend to take you through a microcap company and also in the process give you a fair understanding as to how do we research and how do we pick our companies for our stock advisory members. Okay, so it's a good webinar for Mission Smile members to get a flavor of our stock advisory service and for our stock advisory members to understand how we present our businesses in the Mission Smile webinars. Okay. So with that said and done, since some of our members wanted us to give our view, SmartSync Services view on the market and how do we see the market going forward. So first of all, we have been saying this for long, and people who have been with us for a long time, we never try to predict the market movements. Market has been very benign over the last 3-4 years, particularly in the small cap and micro cap space. So if you look at the last 4 years, even though on a index basis, when you look at Nifty or Sensex, it might not have given great returns. But outside the Nifty and Sensex, market has been very, very, very kind to us in terms of number of opportunities. And we have covered several of those opportunities in our Mission Smile webinars and also in our stock advisory services. So you would have seen how some of those stocks have done phenomenally well, not just in terms of price movement, but also in terms of the business trajectory. So we have been a very strong proponent of trying to dissociate ourselves from too much focusing on the macro or what is going in the global market and how it will impact. Because our view is very simple that these macro events, uh, even though they are very important and they do have a bearing on the market, it is very difficult to immediately or accurately predict how it will impact the market and with what intensity and for how long. So there are three variables, right? How it will impact, what intensity will be there, and how for how long it will be impacted. If you keep figuring out all these on these things, you will never get a clear answer. But what you can get a clear answer is when you identify an individual business and try to understand whether this business can be looked at from a slightly longer term. And when I say slightly longer, I'm not talking about 5-year, 10-year view. Nobody has that kind of a crystal clear view on any business, not even the promoters of those business. But what we can say with a reasonable amount of confidence is how the next 2 years or 3 years or maybe next 8 quarters can be for the company. And when we get a clear visibility on that front, and the valuation is in our control, as in we find the valuation attractive, I think we should focus more on investing in those businesses rather than trying to worry too much about the valuation. Having said that, I'm not trying to say that nothing is wrong in the market and the market will immediately become better in terms of stock prices rising. Market can take a breather, it can crash, it can do many things which we don't want to not just say, but also not want to think even. Because whether it will be a 3-month problem or a 6-month problem or a 1-year problem, nobody knows, right? But one thing is for sure, specifically after the COVID times, market has become a lot and lot, how do I put it? Basically, not just in terms of demand in the terms of new investors coming into the market. Market has been very good in terms of supply as well. So many new businesses have come into the market, be it SME space or the main board space. And we have a lot of depth in the SME or small cap and micro cap space of the market, which we never had pre-COVID levels, in the pre-COVID times, right? So when that is the scenario, our focus should be to find out winners in those space and bet on them selectively. You can't bet on every company. You have to be very clear on to which companies you find interesting. So that is what our focus has always been. And another thing which I just wanted to say is that from time to time in this bull run from COVID times till now, what we have seen is that there has been a very good sectoral rotation. So if you would have observed carefully, straight into the COVID times, IT and pharma just took off. Then pharma took a breather. Chemicals have not performed over the last 2 years. Last 2 years have also been pretty average for financials. So, and then when it comes to themes like renewables and some new age companies, it has been very good. So market, it is a good time to probably look at sectoral rotations, something which can happen. So that is a crux of what is our view on the market today. So since many of the members requested on our Telegram channel and also on our WhatsApp group, I just thought I'll give you a brief view of what we are looking at in the market at current times. So I'll just start with the disclosure now. I think disclosures, Shivam, you can also share, but let me share my disclosure first. I am not invested in the stock which is being covered by Shivam. However, Shivam is invested in the business. And since Shivam will be presenting and he's himself invested in the business, you can expect some amount of biasness. However, our effort in all our Mission Smile webinars has been to try and give you an objective view of the business as much as possible. And please feel free to ask questions, because the best part of our Mission Smile webinars is that we don't want it to be a monologue. You should keep asking questions in the chat box, and from time to time, we'll take a pause and we'll address all those questions. Okay. With that, I'll just spend one more minute to explain about what we do at Mission Smile and some news about our stock advisory services. Okay. So Mission Smile is an educational platform of SmartSync services. We have been doing this for over 4 years now. And as you would have noticed, this is the 43rd Mission Smile webinar. So every month we do a webinar on a business or on a sector. And all these webinars are recorded. So you can find all our past webinars and past research content available on our platform. Okay. And we are also available on Android and iOS device. Right. And I would say Mission Smile webinar is just maybe 20-25% of what we do at Mission Smile. And there are other things like we have investing masterclass where we call guests from the industry and take their views on the market, or about their journey or maybe a specific sector. Like last week only, we had Mr. Kedar B of uh, Congruence Advisor, who gave his view on how to navigate this correction. The video is available on our Mission Smile platform. You can watch whenever you want. Then we have from time to time sessions with Atul Rawalji, who is a pioneer in investing in the microcap space. He has been doing that for more than 3 decades now. So again, the recordings of those sessions are also there. Because Atulji is a very busy man, he travels around 15 to 20 days in a month, uh, reaching out to microcap companies, promoters, doing scuttlebutt. So these sessions with Atulji is not a regular thing, but we try our best to have him on the platform whenever he has something interesting to share with us. Uh, Another thing which we do is that we keep making a repository of small cap research notes. So there are 100 small cap research notes which are there on our platform. And we are going to share 50 more small cap research notes in the next 1 month or so. So that is in the works. So that's pretty much about Mission Smile. More than 7,500 investors are now learning about stock market from our Mission Smile platform. Then comes the stock advisory services. We have been doing this for more than 1.5 years now, and we have got some really good response from our members. So thank you so much to all of you. And in the recent times, we have put a pause on new onboarding for this service, but we continue to serve our existing members. In fact, in this fall, we have identified one very good 600 crore market cap company. And probably by this weekend or maybe on Monday, we are recommending that stock to our members. That's it. Anything related to these services or about Bright Brothers, you are free to ask on the chat box, or you can ask us after the end of the presentation. So that's it from my side, Shivam. I'll stop sharing here. Maybe you can share your screen.
Yeah, thank you, Ankit bhai.
Yeah, and I'll keep myself on mute and switch off my video, but I'll be there whenever you need any help.
Yeah, my screen is visible, right?
Yes, you just check. Let me just check. Is the annotation? Yeah, you have to disable the annotation.
Okay. Now, from where do I do this?
On the right side, on the top right side, there are 3 dots. Just use that and
Okay.
I think it is still there, annotation. You have to disable it, but otherwise, throughout the presentation, we'll have that issue. Maybe you can stop sharing. And again, when you start sharing, you will see when you start sharing, let me just share it with you. Okay. Can you see the option where you just, or maybe I can share the PPT and I'll keep on.
No, I'll share with you the Canva link. I think you can present it from there.
Sure, no problem. That also works. So when you share the screen, on the right side, there is an option called More, and there are 3 dots.
Yeah, but I'm not getting any option from where to.
No. So when you click on that in More, where there is written More and there are 3 dots. I'll just stop sharing. You can start again. Yeah, you share again and you'll see the last option being, once you share the screen, there is an option called more and there will be three dots beside it. First share your screen, then you'll
Okay.
get that option.
Okay, more.
Then you have the option of disabling the annotation for others.
Okay, done.
Done. Great. So over to you, Shivam.
Yeah. Sorry for the hold up, guys. Um, good afternoon. And this is like a what do you say? Very interesting company that like I came across a couple of months back. And like usually what we do here is like we explain like our philosophy, our framework, like about like how we go about researching the stock, like how they come on the radar, right? So similarly, like a few like months back, I think in November, there was like one report which said that uh, India is going to face potential summer shortage of ACs and fridges due to BIS refusal of Chinese suppliers. Now, this is also like if you look at this in conjunction with like previous government actions, like wherein like they banned import of like ACs from like China, refrigerant like ACs filled with refrigerant gases from China and everything. So you can like come across that government is trying to come up with an ecosystem wherein the consumer durable space uh, can thrive going forward, and it is like going to be a very incremental shift towards this. It won't be like at one point of time they'll come up with regulations and like stop everything. It will be like very incremental in terms of the effect. So and then also like when you see about like the heat and everything, like how AC is ACs are like not a luxury anymore, right? Like everybody's saying that like government should like cut down the GST on it because like it's not a uh, luxury. So what we are seeing is like going forward, ACs, fridges, also with per capita increase, urbanization and everything, ACs and fridges are going to like grow like anything, this industry. So, and that trickle down effect is going to come down to the ancillaries or the manufacturers of like plastic components and they will also like get benefited from this shift, which is like going to come. So as you can see here on the screen, like parts of air conditioners, parts for refrigerators, a lot of plastic is used. So we felt that okay, if there is going to be a shortage of supply, pretty sure more and more ACs and fridges are going to get manufactured here in India. Anyway, we are seeing a lot of the effects of global warming and like heat playing out. So then we figured out, okay, if we are not going to bet directly on the consumer durable space, which are the ancillaries who are going to get benefited from this? So then we came across the plastic manufacturers, and one of them uh, is Bright Brothers. So that was like one, and the other, on the similar day, there was like one more very interesting article on Economic Times from Mr. Subramaniam, who is the advisor uh, at Quantum investment firm. So he spoke about catalyst effect in value investing, and like how recognizing these catalysts at the right time, in terms of the journey of the business, can help investors generate potentially superb returns, if they enter the stock at the right time. So as like chemistry students or like science students would know, like how catalysts can speed up a reaction. Similarly, like certain events, certain decisions of the promoters, certain macroeconomic conditions, uh, certain financial like M&A activities can potentially uh, accelerate the growth uh, of the company. So that was like, we took both of these articles in conjunction, and we felt that Bright Brothers can be like a very interesting company to look at. So also like other factors were also like supporting it, given that right now EV, especially the two wheelers, what we are seeing is that we are there is decent growth in this space. More and more players are coming in. They're like tier one players, but there are also like tier two players who are also like increasing their presence in this market. And also, and here in the two-wheeler EV space, plastic also like plays, or the high performance plastic play a very huge role, because we are seeing incidents of uh, fire in EV, right? So, and batteries are stored in the floor bed of the two-wheeler, and that is enclosed by plastic. So the type of plastic that you use, the material that you use is like is very critical in the safety of EV two-wheelers. So here, what we are seeing is that Bright Brothers also recently got like partnered with Ather, and they are providing plastic components to them, which are used in the floor bed. It's a recent partnership which they are growing. Obviously, these players like what do you say, major tier one players have like many vendors to whom they give out their outsource their raw materials. Bright Brothers is one of them. So this is again something which piqued our interest in Bright Brothers. And financials, of course, if you look at Screener and how they've grown, so it's a clear case of turnaround as well, right? So when we talk about like catalyst, this is something which supports that. So if you look at the sales of Bright Brothers in say 2020, like post 2022, right? So September 23, they were doing about 57.82 crores, and like within a year they've grown it to 88 crores. So there is like some sort of a growth which is like come into the business. And the same period, if you look at the operating margins, they've increased from 2.94% to 9.46. And that has like, of course, trickled down to the bottom line as well. However, nevertheless, we have seen that depreciation and the financing cost, or the interest cost, has also like gone up during this time, but because they have also undergone capex, for which they've borrowed the money. So again, like very healthy upward trajectory, which looks like it will sustain. Again, so if you look at March 2022, uh, they sold a land parcel, the proceeds of which were used to expand their manufacturing capacity. And some of the fund was also like given to the shareholders as well. As you can see in August 2022, they gave 5 rupees dividend to the shareholders. Now, us like at this point, it's not about a 220 crore company, but like few months back, it was like sub 150, 100 crore company. And a company of that size to give regular dividends show that it is shareholder friendly as well. So this is again something very positive that we come across regards to Bright Brothers. Uh, Now, given the industry that it operates in, it's a very capital intensive business. So what usually happens here is that uh, a capacity expansion or setting up a new plant is more or less simultaneously with the new deals that a company wins, because the customers want that the vendor should be nearby to the their own facilities. So as and when you increase your pool of clients, the capacity has to be expanded. So for growth, like regular capex is necessary here. That you can probably see from March 2022 to 2024. So you can look at this company from like two eras, like pre 2022, and I'll talk to you about the history and everything. The company is 75 plus years old now, and the stock has been listed since I think 2009. The company was not at all doing anything. It was like in a slumber uh, till March 2022. And post that, we are seeing that they've increased their fixed asset base uh, by like almost two times. So it went from 42 crores worth of assets to 82 crores. So the gross block has like expanded. And that has like happened without equity dilution. So that is like one positive thing. And of course, like they've used some of the proceeds from the land parcel that they sold, as well as they've taken external borrowing as well. to address this capex. Again, when you look at the P&L statement, you will see that the earnings of the company has been like, especially in like, last 10 years, if you look at from March 2013, so there have been lot of negative years, right? Like hardly there are 4 or 5 years before 2022 wherein the company was like positive on the bottom line, but still it managed to uh, you know generate healthy cash flow from operations. So this like shows us that the working capital management of the company is decent, very strong, and like it does not require external funding to support its operations. So that was like again another healthy sign, uh, which strengthened our conviction on Bright Brothers. And again, like at SmartSync Services, I think I mean some of our regular listeners would know that we are looking at companies wherein there is convexity or the increase uh, in like ROE, ROC from like single digit, low single digit to mid double digits. So this is something similar that we are hoping to play out in Bright Brothers, wherein like the business like since like last 1.5 years, wherein like till September 22 quarter, they were like generating negative returns, and suddenly like post quarter 1, quarter 2, sorry, post quarter 2, we are seeing strong earning momentum here, quarter 1 and quarter 2. So this is something that we are playing at, wherein like there will be significant growth in ROE, especially with the operating leverage that will like kick in with new plants also like coming up recently. So if you look at the ROCE as well, in say from like March 2018 to 2020, they were like into like double digits, and then they went like, as you know, that they had expanded the capacities, so there was a capital outlay, which also, and like combine it with like no returns, no profit generation uh, on the operating level, uh, the ROC has dipped like from 20% to 10%, -4%, and like 2% in March 2024. So, but like given the H1 performance of the company, we are confident that if the earnings will sustain, which the management we recently had a call with the management as well last month, and they're confident of like growing uh, 15%, 20%. So it gives us belief that the convexity which we are like looking at in terms of ROC and ROE, they will again revert back to at least mid-teen uh, by FY26. And also like if what we are thinking happens by the end of FY25, they might also clock 15% ROE returns. So this was uh, about the financials, which like interested us. But also when we talk about catalysts and how it affects the company's performance as well as the share returns. You can see here from the arrows. So August 21, July, August 21, I think the quarter 1 results came in, which were positive after a series of what do you say, negative profit, sorry, loss that they generated in the past. First time they became profitable. Um, we saw a spike in the share returns, went into consolidation. Again, strong quarter 2 numbers, again, a breakup. And then what you are seeing here is like a series of catalysts playing in terms of some inorganic growth as well. So I will come across, but I'll just like allude to the fact that they during this time also there was a talk of Bright Brothers acquiring Syntex Logistics, which is a US based company. So the share price run up post December that you are seeing here is because of that. So a lot of things played out here, and the catalyst which we are talking about certainly resulted in some of the price movement which was seen here. So like after giving you like a brief taste about like what we are going to talk about, like and how Bright Brothers came on our radar, how it helped us to like develop a complete report, talk to the management and everything. Uh, Today we'll be covering some history of the company, about the business and the catalyst effects. Like we'll take individual catalysts and decipher them about like how it contributed to the company's growth. And then we'll briefly talk about competition, valuation, and risks. So if you guys like have any questions, you can like raise your hand, or you can like put in your questions on the chat box. Uh, I can probably cover it because like I'm almost halfway done. So probably I'll quickly cover the slides and then we can like have a Q&A going forward. So as I mentioned, it is the company is having a 75 years plus of history. Interestingly, it was founded by T.W. Bhojwani, who had come from Lahore just after the partition and set up a company here in Mumbai. Uh, so they were at that point of time they were a pioneer in the plastic molded product manufacturing. Um, I think there is one very interesting video on YouTube. I think I recommend everyone to go and watch that after the presentation about the history of Bright Brothers and like how they were like very huge at one point in time. And like like I think they were in 1960s, 1970s. Uh, they were like very close to Maruti Suzuki as well, wherein like they provided a lot of auto component parts to that company. All the buckets and everything during that time were also manufactured by Bright Brothers. So uh, that particular documentary is like highly recommended and can give you a taste about like how uh, you know the promoter set up the company, some history, some politics, and how it has like managed to survive till 75 years. So uh, very interesting. They have like 6 plants which are operational today. There were like many. They had to close down few plants because uh, you know they remained back in terms of the technology, in terms of the products that they had. So these plants were not performing well, and they had to shut down. There was a restructuring that happened, I think in 2011 or 2012. So they had to close down a couple of plants, and but recently again, they have started commercializing two of the plants, one in Hosur and one in Pune. So this is like the brief of uh, Bright Brothers and their history. Currently, uh, the company is headed by Mr. Suresh Bhojwani, uh, and recently, I think in 2022, his son Karan Bhojwani also came into the business as a full-time director. The promoters have like you know decades of experience in manufacturing and trading of injection molding plastic components. So this is their journey, in a slide. Started the operations in 1947. Uh, had like huge clients, as I mentioned, Maruti Suzuki, Whirlpool, Hyundai in 2006. Uh, Acquired a factory from Eureka Forbes in 2009. A lot of restructuring happened between 2009 2012. Uh, they started their first second plant in Pondicherry for Procter and Gamble, and 2023 new plants in Hosur and Pune became operational, as I mentioned. And like recently, they acquired Syntex Logistics, and they had also set up a subsidiary in US called Bright Brothers LLC. So that was a brief history on Bright Brothers. Now talking about the company in detail, as you can see, they are catering to consumer durable parts. Now, see, this is a micro cap company, 200 crore company. Not much information available anywhere. They don't do any presentation. They don't do any investor con calls, give out presentations. All the information that you can see here is from the annual report. And as I mentioned, we did have a chat with the CFO of the company uh, last month. And what we got to understand from them is currently consumer durable parts and allied industries contribute to about 90% of their revenues. So major chunk of the business is uh, in the space of consumer durables. But they are also present in like manufacturing crates, bins, and containers. Haircare products, interestingly, they do have like one website, uh, and they run a brand called Devo. Um, and most of the products are probably sourced from China and Taiwan. But if you look at the website, they are not only catering to retail, but they are also catering to some salon chains across India. But it is a very small part of the business, nothing major. They're also like into toothbrush handles, tool and die making, painting, uh, automotive parts, as I mentioned about Ather and pellets. Uh, 6 plants which are operational, one in Pondicherry, Haryana, uh, Uttarakhand, Haridwar, Hosur, and Pune. So quick glance at each of the consumer durable segment. As I mentioned, 90% of revenues come from uh, this particular segment. Now they manufacture and supply parts with regards to refrigerators, air conditioners, washing machines, water purifier, vacuum cleaners, and like other products such as fans. Uh, and here the clients include Whirlpool, Eureka Forbes, Blue Star, Carrier Media, and others. Recently, they got into a partnership with Ather, wherein like they're supplying floorboard plastic components. Currently, this segment is contributing about 10 to 15 crores. Uh, Now, what we understand is this is a very recent agreement, a recent venture with Ather, and this business is set to scale. So what happens is like Ather has many vendors which supply the same part. Now, as and when new models come up, as and when like Ather becomes comfortable with Bright Brothers and its delivery, uh, management is confident that this partnership is set to grow. And apart from this, what they are also like doing is they're talking to a lot of tier two players in this space. And so obviously it won't be as margin accretive as Ather is, but this can potentially give them the volumes uh, required, which can like help them scale this particular segment. So they're very upbeat about Ather, and they are diversifying into this space very heavily. So in the time to come, we can see that the revenue contribution from this space going up. Uh, Again, recently they have also started supplying plastic components to Genus. As you can see, smart meters also like have a plastic body, which of which Bright Brothers is like one of the many vendors which supplies to Genus Power. Again, a very new relationship, and management was very upbeat about this as well. That we'll get more and more orders going forward. So again, one to watch out for. Is not contributing much currently because it's very recent, but like in the few quarters and years, I think this space can become very big. About toothbrush handles. So what Bright Brothers does is they manufacture toothbrush handles for Procter and Gamble. So Oral-B toothbrushes that you see, the uh, the handles are made by Bright Brothers, and it is like done on job work basis. So uh, Procter and Gamble has given this entire thing to Rialto Enterprises, and Rialto Enterprises has partnered with Bright Brothers to manufacture the toothbrush handles on job work basis. It's a very old partnership, and though not like contributing much, but like it gives volumes to Bright Brothers, and not much movement can be expected from this. But yeah, again, they are also like into crates, bins, and containers. I think this is also like a very old segment, legacy segment. And Devo haircare products I already mentioned. So interestingly, I think this is something that is very important for all the listeners here, that Bright Brothers has like now come into the fray of composite plastic products. So composite plastic products are nothing but like there can be some performance plastics or say fibers which are also added into the product. So this is margin accretive for Bright Brothers. And what they're planning to do is they'll use the Pune plant as an export only, wherein like this plant will only be used to export the products. So as I mentioned that they have acquired Syntex LLC in US. They've also set up a wholly owned subsidiary, Bright Brothers LLC. So the idea is that they'll manufacture composite plastic here. 70 to 80% of the goods will be like the product will be manufactured here, and then again the remaining value addition will happen in US, and they will cater to the clients there. So potentially it is like margin accretive for them, a high value product, and so our sense is that they are supporting railway clients there in US with this product. So again, a very interesting segment. The revenue potential from this on annualized basis is 50 to 70 crores, as mentioned by the management. And this will again, like with time, uh, this number will again expand going forward. So the catalyst effect that I was talking about, so being a science student, still I was like very haunted by the chemistry lectures. I still am. So if you would know that catalyst is nothing but a substance that increases the rate of chemical reaction, uh, it lowers the activation energy required for the reaction to occur, making it happen more effectively. So uh, this is the definition of catalyst, and something similar also like happens in investing, right? So Mr. Subramaniam, MD of Quantum Advisors, very beautifully uh, like has divided the catalyst into four types of buckets. One is the internal catalyst. Here, new management has come up. Second generation has taken over the business. There are several cost-cutting initiatives. They've launched new products. Product mix is changing, getting into uh, high margin businesses, entering into new geographies, new market. So this can increase, uh, the profitability or the product mix of the business. So this is like one type of catalyst. The other is the external catalyst, which I think we referred to like in terms of like India banning ACs, the import of ACs, or like BIS putting blockades on importing certain components from China, certain market trends which we are seeing economic shifts in terms of like government wanting to build an entire electronics ecosystem here in India, whether it be consumer durables or other segments as well. So this is like the external catalyst. The third one is the event-driven catalyst, which are like acquisitions, mergers, strategic partnerships, restructuring, and the last one is the financial one. So it could be the structure, the debt that the company has taken, the capital allocation, cash flows, uh, or any action which like boosts investor confidence in the business. So these are the four type of catalysts that Mr. Subramaniam had talked about in the article. I'll also like share with you the link here in the chat box after this. It's a very interesting article. I would suggest that like everyone you should like go through it and understand the framework with which Mr. Subramaniam operates. And this is what has inspired, us looking at Bright Brothers. So I'll take up each of the catalysts here with respect to Bright Brothers. The first one being the internal catalyst. So here what we are seeing is like changes within the company, right? Or the management. So all of this has like played out for Bright Brothers. So when we talk about like the certain cost cutting initiatives. So see, one thing we need to understand is that this business is like very competitive. A lot of unorganized players are there, and there is like no pricing power. So any margin expansion has to be supported by cost cutting or improving the efficiencies of the operations. And this is what management also alluded to in our call that we had, that the room for like the margins are like probably what you saw in like H1. So that is like what the range that they have here. Any further improvement in margin has to come from cost cutting. So that we can see here in their initiatives as well. So they're coming up with new plans. Again, so just to like first, I'll talk about certain initiatives that they have taken. So, this is the factor which the improving the efficiency through the use of technology or equipment upgradation. So they have mentioned very elaborately about this in their annual report, wherein like they have upgraded their current machinery and uh, you know in terms of power also, like in order to bring the cost down, they've installed solar panels. Certain like processing, like in terms of optimizing uh, their current processes and everything that also like been done. Labor saving, efficient production, improving the throughput. So all of these initiatives that they've taken. Now, apart from this, if we go back here, so new plants, right? So the two plants, one in Hosur and one in Pune. Pune is like a composite plastic manufacturing plant, margin accretive, high value. Haridwar also, the new plant, sorry, Hosur, new plant again, for which I think they have several partnerships set up with their clients like Blue Star and everything. Uh, so that is again like, so the production has started like in 2020, November 2023. It has like not peaked yet. So as in when the optimum level of production happens, which is like about to get kicked in during like this time, we can see that the margins might again improve. Uh, their wholly owned subsidiary in US, as I mentioned, that they'll be manufacturing 70%, like semi-finished, they'll be importing semi-finished goods from their Pune plant, composite manufacturing plant, do some value addition in US. And again, like since it will be like export here, it will be sold to the US clients. So what we are seeing is that again, this will be like a margin accretive for Bright Brothers. And our interaction with the management, like it was a very interesting thing that he said was uh, they already had plans. So the wholly owned subsidiary was already set up much before, and the acquisition of Syntex Logistics like happened recently. Now, interestingly, Syntex Logistics is also based out of Wisconsin, and Bright Brothers LLC, which is a wholly owned subsidiary, is also based out of Wisconsin. So management said that they already had some plans. If they had not acquired Syntex Logistics LLC, these growth initiatives would have taken probably 3 years, 4 years to fructify. But them acquiring Syntex LLC has accelerated those growth plans. So this was already a functioning unit. If I think I'll come to the revenues that Syntex Logistics was already doing uh, before they acquired. Supports the fact that this will probably accelerate the growth of Bright Brothers LLC in the US business. So something very interesting can be looked out for in the next 4 or 5 quarters from uh, the US business. So Bright Brothers LLC was like not doing anything in FY24. It was like a loss-making entity. So going forward, we might see that this business also like turning around, which can again improve the top line as well as the margins for the business. This we've already covered. And again, like one of the internal catalysts was a management change, or like us, second generation, third generation coming into the business. Same is with Mr. Karan Bhojwani. So he was appointed the whole-time director in April 2022. So he has been involved with Bright Brothers since an early age. And if you look at his profile here, he joined as a management trainee. Then, like before taking over as the whole-time director, certain noteworthy contributions also resulted like in him being appointed here. But obviously, like being a third generation, he was supposed to take the mantle anyway. But he played a huge role in expanding the business of Bright Brothers. So this bodes well for the company going forward, wherein like a young guy has come up, relatively young guy has come up and like will take the mantle going forward, and has already participated in the expansion and growth trajectory of the company. The fifth factor, which can again act as internal catalyst, is that apart from setting up new manufacturing plants, what the company has also done is that it has become vertically integrated. So recently, company has started like a paint shop in Haridwar, wherein like they are painting the fan blades. So they are anyway manufacturing certain fan components which are used in ACs or like fans, and they've also like started painting the fan blades. So this becomes again margin accretive for the company, given that like they are adding value to the customer. Customer does not have to go to another vendors for this same job. So this is something again which can contribute to the business. And as we can see that capex is very much in tune with new customers coming in. So they have doubled their capacity in the last 2 years. Uh, and they are bringing in new customers. They've already brought in. They're in talks with many. So that can again like be a trigger for Bright Brothers. They've diversified their. They're trying to diversify. Um, you know, Given that they have entered into partnership with Ather, which is in the automotive segment, partnered with Genus, like started the wholly owned subsidiary in US that will again like give them some diversification from the majority of the business that is like currently coming from consumer durables. So and see, like with any business, there is some sort of like you cannot see that there will be like a sequential growth in the business quarter on quarter, given that this business is very much catering to the consumer durables, which is again like cyclical in some ways. So that impact can be seen here, and that is where diversification is like very important for Bright Brothers. If you look at the volumes here, I think they've mentioned in their FY24 annual report as well that there was like increase in volume as compared to the previous year, and management is also like confident that this uh, growth in volumes as well as realization will keep on improving in the quarters to come. Now coming down to the second type of catalyst, which is the external one, I think we have already covered here in detail about like how consumer durable space and the ecosystem that is being developed here, certain government regulations, and how Bright Brothers is like very much a beneficiary of this particular move, and also about high performance plastics, which is set to grow in like almost like 10% till I think 2031. So a growing industry. Bright Brothers also like aligned with that in terms of their plant in Pune. So that should bode well for the company as well. The third type of catalyst that we'll talk about is the financial one, and this is also like I have covered in the beginning as well. They sold their land in March 2022. Like use that capital to grow their business, expand their capacities, and also give out healthy dividend to the shareholders. And like again, consistent dividend payer. So pretty much shareholder friendly, has not diluted equity, uh, has taken borrowing, but like if you see in September results, they've also started paying back. So I think there's a set timeline wherein like they'll soon become debt free as well. So and management said that they have not planned any further capex till now. So that should also like bode well for them. The last catalyst that we'll talk about is the event-driven one, which again is the Syntex Logistics LLC. And we saw in the price movement as well, like how the share price reacted to this news once in August, along with the quarter one results, and once recently as well when the uh, acquisition was completed. I think it was in December, or it was on December 29th, 2024, wherein the acquisition was formalized. So, and from then onwards, the share price has also like bounced up strongly. So that was like one more catalyst. And I discussed about like how this is like a very strategic move from them, wherein like value addition, like semi-finished goods will be imported from India, from their Pune plant. Value addition will happen in US. And also like we are seeing how Trump is getting aggressive in terms of, manufacturers making in US, and how like the trade war, the tariff war will play out. So this particular move from Bright Brothers can again benefit them in the long run. So this was acquired for 75 lakhs only. And if you look at their performance, Syntex LLC Logistics performance, uh, they have like a top line of 41 crore in FY24, 58 crore in FY23, and 56 crores in uh, FY22. So a very healthy business acquired for 75 lakhs. And like we did some like research here through HS numbers. So what we found is that Syntex Logistics LLC has recently exported railways and auto components. And again, like this was from Syntex BAPS plant in Pune. So this is something that is very interesting that we came across. Welspun wrote off 11 crores uh, arising from the decision to sell this unit to Bright Brothers. This was like from their con call. So it was like again interesting. Uh, as you can see, like in FY23, it was just doing nothing. But in FY24, this division saw uh, an income of 41 crores. And also the purchase of stock in trade also like has gone up significantly. So, this shows that like I think there are some orders ready to be delivered. Obviously, they have just completed this is FY24, and Wright Brothers has only recently finished the acquisition of Syntex Logistics LLC. But again, very promising signs from this acquisition here. Yeah. So Syntex Logistics, as I mentioned, they were importing semi-finished products from Syntex BAPL India, added value in the US, and sold to US end users, which are mainly railways and automotive businesses. This is I'm talking about Syntex Logistics. So finally, talking about the risks and challenges, again, company has like no pricing power. There is no entry barriers here. Business is highly fragmented and competitive. So even like if we talk about the business of Bright Brothers with respect to like even though 90% of Bright Brothers revenue is coming from consumable uh, uh, durables. Now, when we talk about Whirlpool and Eureka Forbes, which are like two of the biggest clients, so only 4 to 5% of their business goes to Bright Brothers. So again, like you can sense that how big the industry is, how fragmented it is, and so they don't have any pricing power here at all. Uh, Plastics again like has environmental implications here. So strong regulations are there regarding waste management and emissions. So this is like another risk that the company has to like deal with. Uh, so if you look at the plastic molding business or the industry, it is only going to grow at about 2 to 3% CAGR over the next 4 to 5 years. However, since they're pivoting to the high performance of the composite plastic market, which is set to grow at near double digit, that shows some sort of like foresight from the management to like shift towards this business and can somewhat mitigate the risk arising from the slowness in the industry. Again, as I mentioned, Whirlpool is like one of the major clients, and like 70% of the revenue at one point was coming from this, and like about 15% was coming from Whirlpool. Sorry, from Eureka Foods. So you can understand like how concentrated they are in terms of their client uh, revenue. But management was saying that this number has come down. Like it was about 66 to 70%, and it is like come down significantly. And we are seeing that they're diversifying into other segments as well. So hopefully the risk won't like it will be mitigated uh, in probably 3 or 4 quarters with more and more customers coming in. And again, industry is very capital intensive. Like more customers you add, more plants and factories that you need to open up. Now, one thing that we need to like, apart from the risks that I have spoken about, so we need to understand the business in this way. Uh, say I'm Blue Star, and I have given some sort of like business to Bright Brothers, and like there will be some business given to company A, company B. National Plastics again is another company which is operating in the same segment. Now, in order for Bright Brothers to grow the business, is that either they need to be very efficient in terms of the delivery and the quality, uh, or else like they will be limited to like again 4 to 5% of their thing, and the other option is to like add more and more customers here. So in this industry, what happens is that when we talk about the margins, the raw material prices like are fixed by the customer here or the client. So they every month there is a review. There is some model based on which the raw material prices are like finalized between Bright Brothers and the customer. And every month, Bright Brothers is given a visibility of or other new orders. So it's like a monthly business which goes on. So it gives them some sort of a cushion in terms of that any hit on the raw material will be taken care by the customer here. However, that also means that the room for margin expansion here is like not there, except for if they like do some cost cutting, improve their production efficiency, things like that. So that is how margins are like probably capped to be like in the region of 8 to 9% for Bright Brothers here. Another, like it cannot be said a risk, like it's none of our business about like what promoter does in their private life, but like they are very much into the entertainment industry. Like in media, there are lot of the promoters are out there in the media a lot and are labeled as socialites. So, but as long as like business is not affected, I mean, it should not be a risk. So when we talk about the competitive landscape here, as I said that there might be few listed players, but the industry as a whole, it's like unorganized and fragmented. So one of the peer comparison that we have done is like with National Plastic Technologies. It's like the same size almost. What do you say? Operates in the same sort of segments. However, it is like more diversified as compared to Bright Brothers, and it has sustained its business over a period of time. If you look at their performance over the last 4 or 5 years. However, like what interested about like Bright Brothers was like the turnaround in the business that has happened. So if you look at the numbers, you might see that okay, like in terms of P ratio in the trailing 12 months period, obviously Bright Brothers is elevated because of the compressed or the depressed earnings, um, whereas like National Plastics is trading at about 23 times, and like even like in terms of ROE, ROC, National Plastics is performing well. But again, that is the nature like about like how Bright Brothers is placed currently. So that is like in comparison to National Plastics. However, like I have run some sort of like a very subjective model based on the guidance provided by the company's management, and I have also like taken some sort of a liberty here. But these are very conservative here in terms of the margins and everything or the sales growth that I've considered. So based on this, what we are seeing is that like from like it is currently trading at about 20 times earnings, FY25 earnings. Uh, Given that they achieve this number, the ROE would be like as the exit 2025, financial year 2025. The ROE stands to be about 14.5%, which again, you know, aligns with like our thesis, wherein like it will go from like low single digit to mid double digits. So that is there. Price to sales of 0.6, EV to EBITDA by 8.1. So as and when the catalysts, some of the catalysts have already like played out, some are on the verge of like converging, and this might give like momentum to the business of Bright Brothers in like next 2 to 3 quarters. So yeah, the entire thesis can be like put in like one sentence, which is like we are betting on the convexity in the ROE by the end of FY25. So this was like our thesis in brief about Bright Brothers, and like with it, I can like take in your questions. Yes, Ankit bhai.
Thanks, Shivam. So there are a few questions already on the chat box. You want me to read them out, and then you will take it up?
Yeah, yeah, yeah.
So the first question is from Uday. I think Uday has two, three questions. So he has asked about acquisition of Syntex Logistics. Could you share more details? What was the revenue of the company? At what price the company is bought? I think some of the details you have already shared.
Yeah, yeah.
What were their products and how did this acquisition help company to grow?
Yeah, so as I mentioned, Bright Brothers purchased Syntex Logistics LLC for 75 lakhs. Wherein, like, if you note that Whirlpool took a 11 crore hit on this. Uh, it was doing about 41 crores in FY24. It was like loss making at that time when they acquired. But again, that we saw that they were like stock in trade uh, about 25 crores.
They acquired
So
from Welspun, right?
yeah, they acquired from Welspun.
I heard Whirlpool. That's
Oh,
why.
sorry.
Yeah.
Welspun.
Yeah. Mhm.
Yeah. So the trigger from this particular business, as I mentioned, will come from like the composite business. Uh, they'll produce about like say their Syntex Logistics is already doing business with some of the railways and automotive players in America. Now, what Bright Brothers will do here is that they'll import semi-finished goods from their composite plant in Pune, uh, do some value addition, and then supply it to their customers. Now, our like before we met the management, what we thought was that Syntex Logistics LLC is just like a trading arm. It does not have any manufacturing capacity, but like management said that there are fixed assets in place which can add some value to the goods, semi-finished goods that probably they'll import from Pune. So again, that is again like very positive, like in terms of like they'll be adding some value there, man, supplying to US manufacturers or the US companies. So again, there will be high margin, and of course they are composite plastics, so they're also like it is like high value. So going forward, management is saying that is on the annualized basis, the revenue potential from this is about 50 to 70 crores, but they can scale this up with experience, with time, because Syntex Logistics was like not probably run as well as Welspun would have liked it, and hence they sold it off. So who knows that Bright Brothers are like successful in like turning around the business there as well.
Sure. So Shivam, Uday also asks about the age of each plants they have. Do you have any idea about the age of the plants? I think
No, they
basically
have
he wants
not
to know.
provided, but apart
bas-
from their Hosur and the plant in Pune, all of them are like very old. Like at least see, Pondicherry plant was uh, opened up in 2012. Haridwar was like much before. So the plants are a little old, but they have gone into like modification and upgradation of the machinery recently as well.
Okay. So you're not expecting any maintenance, any high maintenance capex for these plants?
No, so all the capex has been like done. There will be some minor which is like normal for any manufacturing units, but like majority of the modifications or the maintenance capex has been like done.
Got it. So next he asks, could you share more details about composite plastic? What type of material used in the composite plastic? What are the market that the company is targeting to sell composite plastic?
Yeah.
And he says, I believe the composite plastic is huge set of plastics are there. So I'm curious to know which composite plastic that the company is working on.
Yeah, just a minute. The name is a little complicated.
Sure, no problem. So if anybody has any more question, you can either type on the chat box or you can raise your hands. We'll take. There's one question from Amar as well. Once you finish answering this, I'll take up his question.
So yeah, it is light resin transfer molding and hand layup, HLU, LRTM and HLU. So from what I understand is, what do you say? Light resin transfer molding is like an upgraded version of resin transfer molding. Uh, it is again like high value product as compared to RTM, and this type of plastic is used in like automotive components more or less, and uh, not much idea about HLU here, but yeah, these I think idea is to like supply these to automotive and railway components there in US. Hello, Ankit bhai?
Yeah. So the next question is from Amar. Let me just go to the question. So Amar says, since the capex subdued their numbers in the interim, is the capex fully done? If yes, then do we have an idea about the capacity utilization of the expansion? In short, operating leverage playing out now, or are we waiting for it to kick in?
Yeah, so capex is done. There is like no additional capex that is going to come in, and operating leverage has started to kick in right now because the plants was like commissioned in November 2023, the Pune plant, and the Hosur plant was commissioned in April 23. So uh, I think it is like not at optimum level yet. There is still some room for them to grow here. So it is like the operating leverage has started to kick in, but like it is there is still some juice left here.
Got it. And Gangesh asks projected revenue and PAT growth. I think you covered that in the valuation slide, but you can probably repeat it.
Yes. So from our conversation with the management, what they're saying is that from the current capacity, they can do 350 to 370 crores minimum from this capacity that they have currently. So they are confident of growing 15 to 20%. Uh, However, from in the valuation that I've taken, I've like taken a conservative 15% here uh, with respect to H1 here. So uh, and the margins that they have mentioned is like about like same as what they did in quarter two of FY25. So this is the guidance that we received from the management, and rest of all, like I have covered in the valuation as well.
Yeah. So thank you so much, Shivam. I think one hand is being raised, Ruchit. So yeah, Ruchit, I'm unmuting you.
Am I audible?
Yeah, you are.
Yes.
Hi, Ankit bhai. Hi, Shivam. Thank you for sharing this. So I just wanted to check a couple of questions. So Shivam, you mentioned that the percentage of revenue from consumer durables was around 90%, and the broad thesis includes like how the AC manufacturing would kind of keep on increasing, and also now they have a tie-up with Ather, so there is EV contribution, or there is a so they've started working on EVs and also with smart meters with Genius Power. Could you mention the percentage of revenues that are coming from these specifically ACs right now? And since EV with EV at Ather and Genius Power has just started, so these are broadly the products which are likely to be the fast growing segment, right?
Right. So about numbers exactly, so 90% is from consumer durables,
Is
and
there any sub segment within that?
no,
Like
they have not provided anything like how much comes from AC or how much comes from refrigerants. But like majority, from what I gather, is like through ACs, washing machines, and fridges. So these three are the major uh, segments under consumer durables. But
okay.
apart from that, no further revenue breakdown has been provided.
Understood. And washing machine and fridge would also be expected to be fast growth segment.
Yes.
Okay.
Yeah.
Okay. And with respect to the changes in the management or the major triggers coming in past 2022, so one that you mentioned was Karan joining in, or rather uh, getting to a more prominent position and driving the growth for the company. Are there any other triggers as well, or that would be the major trigger or major change in the company?
Yeah, that would be the major change. It's a family-run business, basically.
Right.
So now Karan Bhojwani has like taken up. But again, like what we have, so the interaction that we had with the CFO, so he himself, I think, was like very much involved in the business. And if you look at the, what do you say, past transactions,
Yeah.
CFO has been like lapping up the shares of Bright Brothers. Like
Oh,
recently
okay.
was January 9th. and he was like he came
Sorry,
across
9th
very,
January. This 9th
yeah,
January.
yeah, this 9 January notification
Okay.
had come.
Okay.
And like he seemed to be like very competitive, like in terms of the understanding of the business, and like he was also like driving in terms of meeting the clients, uh, everything, coordination, organizing everything. So uh, in on that front, what we see, we have not interacted with the promoter, but our interaction with CFO was like very positive.
Okay, understood. And also, so the next question is a little bit more of a approximate. So, since the last trigger has been the acquisition of Syntex, as I understand it, uh, according to your opinion, has that been broadly factored in with the run up that has been seen recently?
Yes, yes, that has been like factored in. So it was like very sharp. I mean, like there were three bursts. I think first was in August, second was I think in November or like pre-December. And then again, like if you see the share price went to 484 recently, and it corrected during the market broader market fall. But more or less, I think it has been like factored in uh, acquisition of Syntex.
Okay. Okay. And last one, if only if you don't mind. So broadly, would it be fair to assume that you have been holding since a very long time?
No,
Or
no, 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 no.
post
I
2022?
only bought like recently and also like very small. I bought only for tracking position, and like it has not given me any chance to add.
Okay. 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 Thank you.
Yeah, thanks.
Yeah. Thanks, Ruchit. And on your last question, I just wanted to add, we actually originally started looking at this business from the perspective of recommending it to our stock advisory members. But we were waiting for our call with the management, and it took us a little more time. They were busy, they were traveling. So by the time we got a chance to talk to them and become more confident about the business, the stock had already run up. So that's the only reason Shivam couldn't also average up, and neither could we recommend it to our members. But we thought that it's a good business at the current juncture. And given the volatility in the market, it is good to have this in the watch list. Okay. Yeah. And there's one question by Dhey. Uh, isn't the current P discounted major future growth? I think you covered this, but you may repeat it again.
Yes, yes. I think the price is reflecting the growth. Uh, so I mean, at this point of time, as I said, like given the reason behind us like not recommending to our clients is that there is like no margin of safety here now. There is no arbitrage that can be played out. So it's now all up to the execution. Most of the things that were supposed to be played out or reflected in the share price has already been discounted by the market. So yeah, but yeah, I mean, like the purpose behind covering this business was just to share with you like like how we at SmartSync Services also like read about the business, and also like how a different way of like looking at a very simple, say, plastic injection mold business is like a very simple business, and like how certain effects, certain catalysts can like you know completely change the trajectory of the business. This was like it was in a slumber. Business was like company's been there since like 1947, and like not, as Ankit bhai said, not many of us knew about the business. Like even like pre 90 November 2024, I had no idea about like something like Bright Brothers existed. So the idea was just to like give a perspective about like how we go about things.
Exactly. And the main takeaway from a session like this is that uh, you can use the same pattern for
Yeah,
different businesses, different industries. So these patterns get repeated. They may not get repeated exactly, but in some form or the other. So the main purpose of doing this is to expose you to this pattern, and you should keep this pattern in your mind so that if this applies or something similar applies in some other business or some other industry, you should be able to probably take the bet earlier than later, right? That was one. And the second one was that uh, we wanted to give our Mission Smile members a flavor of because in Mission Smile, generally we cover mid cap and large cap companies mostly. So we thought that we'll make a change. It was becoming the same kind of companies. So we thought that we'll give them a flavor of what we do at the stock advisory services, where we focus only on less than 3,000 crore market cap companies. And we also thought to give our advisory members a chance to have a look at how we present at Mission Smile, because advisory members generally they get access to our detailed reports because of paucity of time or anything. Some members are unable to read the reports, but they can either listen to the recording of this webinar or can watch the webinar live. So that was the main purpose. And we'll continue this for at least next couple of months. We'll try to cover smaller businesses with less than 3,000 crore market cap. Maybe next month, the business which we'll present on, maybe we can even recommend. But that's the idea. Focus will be on less than 3,000 crore market cap companies. And again, I'll just, before ending, I'll just end one, I'll end with that market talk which I shared at the start. I believe if you are not institutions, if you are managing your own money, most of us are like that only over here, be it people who have joined us live or who will be watching the recording. Always focus more on stocks. Try to find businesses which you can bet on at all times of the market. Every time there is opportunity, try to work hard. It is very easy to say that market is not good, so let's forget about looking at new business. But that is the wrong way of approaching market. Even last year there were opportunities. Even currently there are opportunities. Of course, market will not move in one single straight line, but try to work hard and find out ideas. We at our end also try our best to come up with ideas, and we'll keep sharing them with all of you from time to time. So thank you so much for your patient hearing and joining on a weekend. And the recording will be put up on the platform very soon. So you can access the recording also if you have not joined live. Shivam, you want to say anything?
Ankit, I think Amar sir has like asked about like our takeaway from the management interaction.
Yeah, I think you can take that question then.
Yeah. So I think we, after a lot of, follow-ups and a lot of difficulty, we got hold of the management, to be really honest. And but the call went really well. Like we got very good insights. They were very honest. I mean, they themselves said that, we don't have any pricing power here. Entry barriers are like next to none. And like any change here has to be like from our own efforts. So they were like very candid about their business. And again, like as I touched upon, like the CFO felt like he was like very involved in the business, and I think he has been there since long. So it was very positive. I mean, we felt that uh, they know what they're doing, and there's like some renewed vigor in terms of what is happening. So they are excited about certain growth plans that they have, and arguably, like, in terms of diversification, a lot of efforts are going on. They are meeting a lot of vendors, whether it be in like the EV two-wheeler space. And again, what they alluded was that their relationship or partnership with Ather does not limit them like to like acquire more customers in that space. And like if one component is successful with Ather, with new models coming in of EV from Ather, will bring in more incremental business from for Pride Brothers as well. And they're meeting tier two manufacturers of two-wheeler EV vehicles. So that is something that we can also hope for, that they'll convert some of these negotiations to confirmed orders. So yeah, exciting things playing out. Let's see. But yeah, I mean, on the like closing end, most of the things are like priced in. All the catalysts have like played out here. Only execution remains, and like how they grow their US business. So not much juice left at this stage. Probably we should, like, in this market correction, if again like it comes down to 300 odd price, then it becomes a little attractive.
Yeah. Thanks, Shivam. Thanks, Amar. And thanks, everyone. Just one last comment, because I've been receiving these messages from many people who have been trying to join our stock advisory services, and we have put a temporary hold on new onboarding, even though we are continuously serving our existing members. So trust me, I've just shared that in our chat box also, but just sharing it for people who will probably watch the recording and have not joined live. So by delaying the relaunch of our stock advisory services for new members, we have nothing to gain. In fact, we are only losing out on this opportunity at a time when the market is down. So you can probably invest in many good quality businesses. Hence, we are trying to get it launched as soon as possible. In the meantime, we are trying to provide you some value through these webinars. And I would personally like to apologize for the delay, but hopefully we'll get it sorted soon. So please have some patience. Okay. And thank you so much for being patient for all these weeks and months. But we are on it and we'll try to resolve it soon. Okay. So thank you so much, everyone.
Thank you, guys. Thank you.
Yeah. And the recording will be up very soon. Thank you. Have a nice weekend.